Bitcoin mining is more than just a trend. It's an art. A revolution of how sound money works and is made. Being part of an industry that has 10x'd in value over the past year requires unprecedented levels of flexibility and versatility. It's life on the edge. ASIC Jungle is built on a set of core values: trust, leadership, and competitiveness. Here, we want to do more than just our job. We want to change lives, impact the future, and be something bigger than ourselves. We want to make sure that everybody has a chance to be part of this new revolution called Bitcoin.
So good morning, everyone. I apologize for the background noise of some music that wasn't part of the video, but that is to say that most of us are here today as we share the same passion. A passion for technology, business, and especially a passion for Bitcoin. While some of you are already seasoned veterans in mining, many of you are just starting out. And you might be wondering what makes a certain operation operate better and be more profitable than another one. So things like energy costs, technical expertise, and a solid understanding of mining fundamentals are just a few of the factors that will influence the outcome of your mining operation. Mining, as you know, is a very capital-intensive endeavor, and most of your capital will be spent on purchasing hardware, so better do it efficiently and wisely. So during today's presentation, we will overview an ASIC pricing analysis that we did and elaborate on certain data that we collected. As most of you know, ASIC prices are volatile, just as Bitcoin, and sometimes even more. Last year, as Bitcoin price was trending around $40,000 in February 2021, the average ASIC price for brand new miners was around $38 to $40 a terahash. As Bitcoin continued to climb up to $60,000 in March 2021, we saw the Bitcoin price go up to we saw the miner prices go up to an average of $95 a terahash, only to come down all the way to $65 on average, and in some extreme cases, $50 on average after the Chinese ban on industrial mining. Throughout the year, we saw ASIC prices climb up again, only to be where they're at now, at a much lower price than last year. But that being said, you might wonder whether the price is $120, $60, or maybe even $17 a terahash. What is a simple way of knowing if that's a good purchase price or not? And that's why we decided to collect data from thousands of data points from our own sales and through public channels, and not only analyze ASIC pricing trends, but also understand how to properly price ASICs. And that's how we came up with this scattered plot, with each point representing the average ASIC price in terms of break-even price at 5-cent electricity. So at a first glance, we can observe right here that there's a high degree of variance in the chart. So during certain periods of time, it seems that the pricing in terms of return on investment or break-even seems to be more scattered around the plot, only to return to this area in the middle right here, which seems to be the mean. So we trace the mean line right there that we're going to get back to later. So naturally, we also decided to compare the scattered plot to the Bitcoin price and see if there's any trends that we could be able to observe. And we did observe certain interesting things, such as, I'm going to put the next chart here, such as the way that ASIC pricing rised right after the May 2020 halving in 2020, only to come down right before the bull run. So as the price started trending up, this presented the market with interesting buying opportunities. And obviously, as we mentioned before, since the Bitcoin price and ASIC prices are strongly correlated with a correlation coefficient of about 0.85 in fiat terms, it's very clear that there is interesting opportunities to be seen in this type of chart. And while knowing your mean, you can already have a better idea on how to price ASICs. That's not necessarily enough, since that's just a historical mean and it's only giving you a historical average on ASIC prices over time. So we would like to comment on certain potential interesting buying points here and some comments on the chart. So while it seems that the mean is at 15.5 months, it's still okay to be purchasing miners that are not necessarily priced at a 15.5 month break-even price. Although you might want to pay a little bit more attention if Bitcoin price is high and it's near all-time highs, and you're getting a price that's further away from the mean than necessary, since that can put your operation at risk. Although, as Bitcoin prices are trending low, and especially in historical lows like we're now, you might consider purchasing ASICs even with a higher distance from the mean, since as the BTC price goes up, those values in terms of break-even points are going to come down. So we're going to address the mean shortly once again, but before that, we'd like to make a comment on some observations that we've made in ASIC Jungle. And throughout the years, we've noticed that there is a significant lag in the adjustment of ASIC prices in comparison to the Bitcoin price. And that lag is especially more significant in downtrends and is about 2 to 3 weeks. So if BTC sharply goes down, it takes a couple of weeks for ASIC prices to come down, since for some reason, maybe the ASIC operators want to hold off and see if that's just a scare or whatnot. But in any case, it's a much more liquid market than Bitcoin. Thus, it takes more time to adjust. And a good example for that is just a couple months ago, as Bitcoin was trading around $40,000, ASIC pricing was still around $70 to $75 a terahash for brand new models on the market. But when BTC went down to 22, 23,000, which is a less than 50% decrease, ASIC prices went down almost 70%. And that happened after a couple weeks since the market started to adjust. Another thing that I would like to note is in the current market, especially on the secondary market for new hardware or even used hardware, a lot of operators are currently selling at a loss. So if the market starts aggressively trending up and prices start going up, those same players might want to recoup some of their losses and sell those miners at a premium. So that's an interesting thing to consider. So going back to the mean, saying that the mean is 15.5 months and it's trending up, is not necessarily enough to make an educated decision on whether you're pricing your ASICs well or you're getting a good deal. Although it should give you some sort of a perspective of where the market is at. So that being said, you might wonder where to buy ASICs. Well, obviously ASIC Jungle, but the more important question to ask is when to buy ASICs. And we decided to dig a little bit deeper, and we calculated the standard deviation from the mean. We put that line over here, which gave us a value of 7.6 months. And essentially what that means, it means that 68% of pricings on ASICs are either plus 7.6 months away from the mean or minus. So for those of you who don't know what a standard deviation is, it's simply the measure of the average distance from the mean of a random value in a scattered plot or in a normal distribution, sorry. So to give you a little example, if you took, like, let's say the height of everybody in this room, the average should probably be like 5'10" with a standard deviation of 3 inches plus or minus. But if you go like 2 or 3 standard deviations away, if somebody is like 6'6" or 6'9", that would be a much more extreme value. And why that's important to note is because there is an interesting concept in statistics called the regression to the mean. And that refers to the fact that if you take a random variable in a sample and that variable is extreme, it tends, if you take another sample from, if you take another point from that sample once again, that point has a much higher probability of being closer to the mean. So converting that into decision making in terms of ASIC purchases, where that could be interesting, at least according to our analysis right here, is if you see ASICs, especially when Bitcoin is trending high, selling at +2 or 2.5 standard deviations away from the mean, you might want to wait a little bit, since the probability that in the next couple months or so prices will go down is high. It's probably higher than not. So we think that if you're purchasing ASICs at any time within about 1 standard deviations away from the mean, it's probably a good deal, and that should give you a pretty fair break-even point, disregarding of what time in the market is. But obviously, if Bitcoin is trending low, you can go a little bit higher, especially if you're at all-time lows or market similar as of right now. So another question that we get asked a lot about our clients is, how low can ASIC prices realistically go? And that's a very tough question to answer. But in the extreme case of, let's say, Bitcoin goes all the way down to $5,000 and it's unprofitable to mine at 5 cent electricity, at what price can you sell your ASICs, or if you were to purchase ASICs, how much should you be paying for? And back in the day, 2018, 2019, when we were selling S9s, that was the biggest ASIC back then, there was a time around October, November 2018, even maybe December, where it wasn't profitable to be mining on 5-cent electricity. So all the miners were plugging out, they were selling off the hardware, and it was very tough there was a lot of price discrepancies on the market. So we were selling those miners off to operators in South America and other countries that were operating on zero cost electricity, very lucky people. And the way we were pricing those ASICs is we were estimating a 6 to 10 month break-even price on zero cost. Because if something is unprofitable on 5-cent electricity or 6-cent electricity, doesn't mean that it's unprofitable for everyone. So you might want to consider those operators who are going to be buying and purchasing those miners in bulk if the market was to go to those extreme variables. Another interesting finding that we found is pricing disparity between different brands. And while we were looking at our data, we noticed an interesting trend in Bitmain pricing versus competitors throughout the time. And as we can see, there is almost no price discrepancy between Bitmain and competitors as the markets are trending up. So whether you're buying Bitmain or Watts Miner, you're probably going to pay the same dollar per terahash for your units. Although what's interesting to observe is that when the market is trending down, you have a significant discount on Watts miners and Avalons for those who are mining on Avalons versus Bitmain machines. And where that comes to interest is if you're purchasing ASICs on an uptrend, if you go with Bitmain, you might be able to sell those miners if you have to sell them at a little premium versus Watts miners. You're not going to be able to do that with Watts miners, and you're not necessarily getting a premium for that. Although, if you're purchasing ASICs in a downtrend, there is a clear advantage for purchasing Watts miners versus Bitmain on a dollar per terahash basis, as you're going to be able to get a possibly better deal. So if you want to change your hardware eventually, you might even benefit from the inexistent margins during the uptrends. So to conclude today's conversation, purchasing ASICs with a long break-even periods when BTC is trending high is not necessarily a good idea. When it's low, it's not that bad. Watts miner Avalons are historically cheaper than Bitmain in a downtrend, but not during an uptrend. And something that I haven't mentioned during the presentation, but something that we definitely recommend when consulting with our clients is don't try to time the market. Average down or average up your purchases, because you're not necessarily going to be able to time the market, and that's speculation. So you might as well have a strategy, a more developed strategy on acquiring your ASICs. That, by the way, you can talk to our reps. We're going to be able to help you with that to do. But before I conclude this call, I know that many of you are going to try and time the market. We think that at least you can try and do it in style. So this year, we tried to be a little bit different from just giving away a miner. We decided to do something that you will remember for the rest of your life. We decided to do a draw tomorrow at 5 p.m. and we're giving away a brand new Rolex. They just palm dial with a little branding that looks like ASIC Jungle. That's a brand new watch. So all you have to do is go to our booth. We're at the end of this hall. Scan the QR code, register, and tomorrow at 5 p.m. we're going to do a random draw. It's going to be in front of you guys. So one of you walks out in here and is going to be able to time the market in style. So thank you very much, guys. This was ASIC Jungle, and we appreciate your time.